Okay, so for this video, we'll be taking a look at section AUC 200.19, and this explains the requirements around sufficient appropriate audit evidence and audit risk. And what we see is that to obtain reasonable assurance, the auditor should obtain sufficient appropriate audit evidence to reduce audit risk to an acceptably low level, and thereby enable the auditor to draw reasonable conclusions on which to base the auditor's opinion. So there are a lot of things and terms in here that we need to understand, and so the first of those we want to take a look at is sufficient appropriate audit evidence. What does that mean? So fortunately for us, the AICPA has provided some more color around these terms, so let's go down to that discussion and interpretation. Okay, so now we're down at some of the interpretive guidance for the sufficiency and appropriateness of audit evidence. And we see that audit evidence is necessary to support the auditor's opinion. And so when management is setting its accounting policies and recording transactions, preparing financial statements and such, it's implicitly making assertions about the account balances or disclosures. And so this audit evidence comprises the information that supports or contradicts or corroborates these management assertions. And sometimes a lack of information, for instance, if management refuses to provide the representation letter, then that would be audit evidence also. And so where does this auditor get the evidence from? So this is mostly obtained from the audit procedures that he performs during the course of the audit by maybe getting source documents from management, for instance, invoices and such. And that's where the bulk of his work comes from, is by obtaining and evaluating audit evidence. It can also come from other sources, such as previous audits, if nothing has changed since the prior year, or from the firm's quality control procedures when they're doing the acceptance and continuance. It could also come from other sources inside and outside of the entity, for instance, maybe confirming the cash balances with a bank. It also comes from accounting records of the client, or it could also come from a specialist that's employed by the audit firm or the client. And so the auditor's job is to get sufficient and appropriate audit evidence under the circumstances. So what does this mean? The sufficiency is a measure of quantity, and appropriateness is a measure of quality of the evidence. And so these two terms operate inversely to each other. So we might say if the audit evidence that we have is very highly appropriate, has very high quality, then we might not need as much of it. We might not need as much quantity. So maybe if we're getting evidence on the cash balance at the bank, and we've confirmed directly with the bank the cash balance, this would be very high quality audit evidence. So then we may not need to do other work, for instance, looking at the bank statement to see what the balance is, because we already have a high quality, so we don't need more of it. And so really whether we have sufficient and appropriate audit evidence for which to base our opinion is very much a matter of professional judgment. And so more discussion of this topic is in AUC section 500, called audit evidence, and it gives us more detail about the auditor's considerations in obtaining sufficient appropriate audit evidence.